To discuss the outlook on the rupee, I am now joined by Satyajit Kanjilal. He is CEO Forex Serve, and Woon Kichia, he's head local market strategy at RBS in Singapore. Thank you so much, people, for joining us. Mr. Kanjilal, let me start with you first. And how do you see the RBI steps? And do you think that would really curb the decline in the Indian rupee?
Well, that's difficult to say whether it will succeed. But obviously, all the efforts that they are making currently are designed to produce that effect. Obviously, we have to expect they'll succeed. We can't go on the assumption they'll fail. They have a lot at stake at this point of time, and if you just consider one thing, and don't go into straight line economics, which basically talks about causality, but if we look at what the assets are at stake, is more than $150 billion that are invested in India. And, with the rupee weakening, all that comes under threat. So what that means is that at some point, there could be a run on the economy, so to say. So the RBI has to take some measures to ensure the credibility of the economy, and the rupee is a symbol of that.
But RBI in the recent days has taken many steps. Of course, they are trying to, make sure that there are no too many long positions when it comes to dollars. We have seen RBI intervene into the physical markets as well for last 5 or 6 sessions now. How do you read all of that? And despite all of this, the rupee really hasn't strengthened so much.
Well, let me put it this way. It's like taking a boulder. If you want it to go downhill, you have to take it to the edge. And what they're really trying to do is taking to the edge. And then once the sentiment changes, the boulder goes over the hill, then it's the momentum that takes you there. It basically, we have always seen in the case of the rupee, it's all about sentiment. It's about the buyers, being there in full strength, whereas the sellers are not there. So what they really want to do is to ensure that the sellers come in and start selling, and then the buyers will move away, and it will become a one-sided market. Having said that, we realize that our market doesn't have the kind of depth that we see in overseas markets. So to that extent, they are looking at trying to trigger a panic situation on the reverse side, so to say. And once they succeed in doing that, it will be self-sustaining. So, their effort is clean and plain, what they've done so many times in the past. And, many central banks do that. And in fact, right now, the euro is facing the same situation. If they allow the euro to go below 129, I think all hell will break loose. So, surprisingly, it's holding up with all the bad news. So, same thing, European assets will come under threat if it were to go much lower. Same thing happened to the US. So it's a global story, and India is now being a part of the global economy, is seeing that happening.
Yes, we saw similar measures coming in from Indonesia, and China has just removed those kind of measures in past couple of weeks. But Woon, let me get you into the conversation as well. What's your outlook on the Indian rupee now over the next 6 months and the rest of the FY13?
The next 6 months, we are still pretty bearish on the rupee. It has, has attempted in the last 1 year to try to break that 54 level convincingly, and I think this is going to be still the way we go for the next 6 months, that it will attempt to keep breaking that 54 level against US dollars. How successful it is to some extent depends on how strong or how weak the euro go in the next few months. Now, second half of the year, towards the end of the year, we actually start to have a forecast that is a little better. Looking at dollar rupee towards the back to the 52 level, but that's again quite contingent on the euro dollar positions. We are looking rather, we're only slightly bearish on the euro. We are not really hugely bearish on the euro because we are not ready to be very bullish on the US dollars.
No. Bullish on the US dollar, but what's the reasons that you are watching which are causing the depreciation, and do you see this trend continue for the Indian rupee?
Well, the main reason is, of course, fiscal. If you talk about trade numbers, you talk about inflation, a lot of that is external problems, meaning that if the global economy is doing bad, then it's very hard to drive exports. Instead, commodity prices, oil prices keep going up. You're being hit on the import side, so trade numbers will look bad. So mainly our concern is about fiscal, that the Indian government has not come to grip with the fiscal positions well enough. During the good years, they were not doing the right thing to adjust the tax, to boost the tax revenue. to cut back on subsidies, and now things are bad. Subsidy cost is going up because of the oil prices, and it's just very much too late to start to do something like that.
Mr. Kanjilal, what's your view on whether rupee could be headed in this quarter, the coming 6 months? I mean, of course, right now RBI is making all those efforts, but do you see rupee sustaining all of this?
Well, as we can see that there is definitely going to be an impact of the global market on India. The efforts of the RBI will definitely be supported, let's say, by strength in the euro. I mean, if the euro were to strengthen, and if the risk-taking theme were to be back, and the risk aversion to fade to an extent, definitely I think the market will take cognizance of that, and the rupee may not actually come under too much of pressure. Having said that, we also feel that they are trying very hard, and at some point something will give, and I think most probably it will be the importers who might go on the sidelines, and the exporters might panic at some point.
But there has been these talks about 55, 56 kind of levels. Do you see them coming soon?
Well, of course, I've been in this market over 30 years now, and we've always seen extreme levels being spoken about. As I said earlier, you have a straight line economic analysis which points straight away to, higher numbers. So, well, I mean, those numbers are possible, but whether that is very soon or very far away, one can't say. But I would like to see 52 before I saw 55, to be honest.
Okay. Woon, let me come to you as well. And the belief in the markets, or the Indian markets, is that RBI's intervention to protect the rupee is likely to be very limited. What's the RBI's view on this one?
Yes. In fact, I don't think the RBI has been one of the most aggressive central banks in intervention. And that's why you've seen that the gyration and the volatility in dollar rupee is a lot greater than many other currencies. I think what they have been doing is a bit of intervention, a bit of changes in the rules, as you know, right? Like today, there's been another batch of changes on the rules for corporate hedging to limit the amount of forward hedging or forward buying of dollars. So these are some of the things they do. One of the reasons why is, besides losing reserves having to intervene, is because they are going through a very tight domestic liquidity situation. So when you intervene in the FX market, you actually drain rupee liquidity, and they can't really afford that because it's stifling the economy.
One question that I asked Mr. Kanjilal as well was that some experts have been forecasting rupee to touch 56 due to slowing inflows, deficit in India. Can the rupee really touch that low? What's your view?
I think 56 is a very ambitious level. You're talking about not only a very fresh historical high of dollar rupee. It has never seen that before. I think, first of all, we should test the closer historical level, which is 55, which they've never done before for a day-end closing. They've never touched 55. So let's just say that going at 55 is quite a possibility, but going at 56 is very hard to come. It's quite a long stretch.
Mr. Kanjilal, what's your view on the rupee really? Because while we have been hearing all those kind of levels, would you say that the situation this time around looks really grim because there are lower forex reserves, there is this concern about foreign outflows as well, and of course the kind of economic challenges, the deficits that we have?
Well, I mean, I have my way of looking at things, which of course look at all the standard fundamental economic viewpoint that is developed out of the various formulas. But, I've always felt that, the numbers that you see about the economy are post facto, and you see that all of that, the market, the pricing has discounted. So it's almost like saying that you can't hang a man twice. So what I'm saying is the market knows about it, they've discounted it, and the pricing is actually reflecting that. So to expect that market is going to rediscount it is something which I don't think is very practical. So I think the worst may be over. This is what I feel. Give or take 50 paisa or maybe 1 rupee at the most. I mean 54, 50 may be a possibility. The last high that was seen may be seen. But difficult to say. But then To assume that the RBI is going to fail completely is something which is hard to digest. It would tantamount to accepting a failure on the Indian economy completely. I really can't accept that. But the point is, the proof will come if we see the rupee going below 52.60. We will have a proof that we've seen the top. Till then, market will be on tenterhooks.
Fair point, Mr. Kanjilal. Thank you so much for joining us. That's the view coming in from him then. 52.5 to 54.5 is the range that he's working with. Woon, thank you so much. I appreciate you joining us as well on the debate about currency markets here.